What's up, everyone? Welcome to Monday, September 29th. Welcome, everyone. Give me a sec to start everything. Control. There we go. All right. Let's see what's happening this week. I'll let everybody join in on X as well. Shit, 1 second. 1 sec. Here we go. Okay. This one is live. All right. All right, everyone. Let's rock and roll. It's Monday. It's 9 a.m., 9 to 5, 9 to 6, whatever. And let's take a look, see what the hell's going on, and go from there. 1 sec. All right. Move all this bullshit away. So there are no significant news this week until maybe Thursday. I think there's ISM numbers, which will gauge the economy. The numbers are already low, expected to be below 50. ISM is gauged between above 50 or minus 50, or below 50 rather. And that economic release kind of is already below what's considered a contracting economy. So if the numbers come in and they're gonna be even lower, that's again more firepower towards Fed lowering interest rates yet again during the next meeting. All right, so which again, as I've been ad nauseumly explaining to you since Kingdom Come, will propel markets onward, meaning higher stock indices, higher gold, etc., etc., etc. So today, interestingly enough, the report came out. I think Zero Hedge just leaked it that U.S. gold reserves are at all-time high as well. So U.S. central banks and Treasury, they're net buyers of gold. On top of China. China is the largest buyer of gold for the last couple of years. And this is what you're seeing. That's why all the retards, and I call you retards because you are retarded, when I'm telling you not to short this market and just wait for dips to buy the longs, that's why. Because central banks buying hundreds of billions of dollars worth of gold. And you are with your puny account. Not even puny, it's not even in existence of an account compared to hundreds of billions of dollars, right? Nobody's account is, even on the map. You're here trying to dick around and short it and do this and do that. So instead of riding this wave, you're trying to catch this. And again, you're not gonna short it right here and close it right here. All right, let's be honest. You're gonna short it here, close it here, and that's it. You know, or you're gonna start shorting here, 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 here. You average down, then you get somewhere break even here, and you get out. You close your position at break even. You're like, thank you, Jesus, Buddha, Allah, whatever, for letting me out of my trade, right? And this is why pissing against the wind. So all your mental energy was you trying to short this all-time high here, right? Once the breakout, okay, this is it's the RSI is overbought, this, the whatever, however else, whatever idiotic reason you have to short gold for, right? Same thing here, right? When it took out this high, instead of realizing that this was a breakout retest, a continuation, you, the geniuses, decided to, oh, there's a breakout, let me short it. This is all-time high, it's gone long enough, it's a round number, 3,600, whatever reason, right? And a lot of people blow accounts that way. And risk managers and prop firms, we see what kind of trading you do. And just because you took one or two trades doesn't mean dick, especially because they're all obviously challenge accounts, which are demo. All right, you're literally trading funny money. All right, and everybody's a goddamn genius on the demo, and most of you fail even that. Most of you. So before you bitch and moan and this and that, realize there are systems in place to spot out strong traders and weak traders. And most of the people who apply to be a prop firm trader, unfortunately, they're there for all the wrong reasons. They're not there to make a career out of trading. They're simply there to make a quick buck. They might as well just be selling cell phones on the street or doing some other hustle bullshit business, right? They're not really taking it seriously. They just want to make a quick buck. And risk managers specifically are there in place in banks, in hedge funds, and prop firms as well, to adhere to make sure that the business is making money. And if you're going to be risking way too much money, it's just a matter of time before you blow up. Okay, and we can spot that easily. We have tools in place. We have AI analysis that shows us pretty much predicts if you're going to be a profitable or a non-profitable trader after you start showing us a few trades. So how do you scale an account? Well, first of all, I'm gonna make it easy for you. Don't piss against the wind, right? You want to pick an instrument that is trending hard, and it's easy to trade. So that's why I constantly talk about understanding fundamentals and where the fundamental flow is going, right? So for now, trading, forex is probably not an easy way to trade right now. It's not a one-way train like it used to be during COVID, right? I would, if I were, well, I'm not gonna, you can trade whatever you want, but to me personally, trading indices and gold is the thing to do right now, because it takes, it's just low effort, not low effort. It's never low effort, but it's a lot lower effort to make money trading these two instruments. So stop reinventing the wheel. Stop doing anything. This thing is trending. It's trending hard. All you have to do is just buy the fucking dip, all right? And whether you're trading with FundingTraders.com or FundingFutures.com or anybody else.com, it doesn't matter, because you will make money by simply following the trend, all right? Look, if the chart is moving from this corner to this corner, right? From this corner to this corner, where is the fucking trend? Tell me. Why are you constantly trying to short these things? Because I'm in a lot of public channels, and I watch all these signal services trying to advertise their signal services, and they give some free trade, and they always try to short this shit. And I'm like, Jesus Christ, these poor fucks, these people who buy their services, and they, instead of just going with the trend and having, look at this price action. It just goes up. You don't need to do anything. You need to just get the fuck out of your office and go for a walk, for a very long walk, and you'll be making money. All right? If you miss the initial obviously, well, I didn't buy here. Okay, fine. You get these micro adjustments where you can buy into, right? Even here, 38.2, even though it's not, shell enough, but we were monitoring and said, once the breakout occurs, that's what I'm going to be doing intraday trading on Friday. It didn't retest it fully, so I didn't get in. Okay, fine. So next in line. All right. This was the top, kind of like you. One second. Where am I gonna go? Try to attempt to buy next. Obviously, I'm not gonna be buying right now. We are way over the daily ATR, which is this line right here. So yeah, are we overbought? Probably. The RSI is, you can see the we're diverging hard, and we've been diverging hard. But in a strong market, we've been diverging. Look, we've been diverging since almost 500 points ago, right? Or 400 points. This thing is diverging, and this thing keeps going up. That's a strong market. And why is it a strong market? Again, you have to not just blindly be following some kind of service or technical mumbo jumbo. 1 second, let me just finish this. Don't just blindly follow some idiotic technical analysis flavor of the month, whether it's ICT, smart money, dumb money, retarded money, whatever money you want to trade, or classical technical analysis. All these fucking retards who always talk about I don't need no news. I just look at the chart and that's all. Fine, but that's a retarded way of. It's like being on a racetrack, and you can be a great driver, right? And you can take a turn really fast. But wouldn't it be easier to know where the fucking road is leading to? Even when you watch these car rallies, right? Where all these, Dakar, whatever, racing in the desert, blah, 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 where these little cars zooming in, and there's two people, one is the driver, one is giving him directions. This hard left turn, blah, 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 some numbers, right? Why are they telling them? Because you can take the turn, but if you don't know when the other turn is coming, you won't reach your potential. So understanding fundamental flow allows you to see the future. You can see where it's going to, right? If you know the the Chinese central bank is buying their Politburo bullshit bank of National Bank of China, whatever the fuck it's called. They're net buyers of gold. If U.S. Treasury is buying gold, if France, Russia, Germany, everybody is buying more and more gold, why the fuck are you not going to be joining that flow? Why are you looking at any technical? There is no technical analysis. If there's $1 trillion worth of orders going this fucking way, all you dummies have to do is just go that fucking way. That's it. Just don't do anything else. Until China and Russia and U.S. treasuries will stop buying gold, you have no business of shorting. Trying to catch this fucking move instead of riding this fucking wave is retarded. All right? So get that shit out of your head. Stop fucking thinking that, oh, it went up. Too far. It needs to retrace. Stop thinking that way. You need to reverse your thinking into, I missed this boat. I'm going to wait for a pullback, and I'm going to buy the pullback into the direction of the trend. All right? That's all you have to do. You wait for the pullback, however the pullback comes. Either you're using moving averages or you're using whatever order blocks or whatever thing you want to use. Okay? It doesn't matter at that point. Here's your order block coinciding with this top. So ICT calls this candle an order block. Classical technical analysis calls this previous resistance turn support. Whatever the fuck it's called, whatever terminology you want to use is irrelevant. It describes the same pattern and same price action, right? At the end of the day, you're trading price action. And if this price goes back down here and you get a reversal signal, the probability are, and then you get this high, the high of this candle gets taken out by the next candle, you always have to wait for the candle to close. Always wait for the candle to close, because that's how you get faked out, right? If you get this pattern, just take it. That's it. And will it work out 100% of the time? No. It might just reverse and keep on going down. But 70% of the time, it will work. And that's enough for you to make money. And that's enough for you to scale your accounts. Because instead of taking 15 trades a day and just spinning wheels on one spot, your job, not your job, you have no job. A professional trader's job is to cherry pick great setups. And great setups don't come every fucking 30 seconds. It can be once a week. Even if you're a day trader and a scalper, short-term scalper, you're not going to get every 30 seconds a great setup. You might have 5 a day if you're trading on a 1-minute chart. So take those 5. Don't take 15, don't take 25. Right? If you're trading 1 hour or 15 minutes, maybe you should just limit yourself to 2 trades a day. That's another. Why? Well, because most problems occur of You have zero emotional discipline. So the more, if you're gonna get it's better to cut yourself off at 2 trades a day, for example. Because if you have 2 losers, you're gonna start revenge trading. You're gonna FOMO in. You're all mad. Your ego is hurt. You're fighting the market, and this is how you blow up accounts. And you're like, okay, another $20, another $50, another whatever. You keep reloading these accounts. But if you reloaded 100 demo accounts, and let's say you then barely get to profitability on funded account, how does it look on your track record? You look like like a gambler. So who's going to entrust you with any capital? If you, out of 100 attempts, you succeeded once barely, and then you're like, okay, give me money. It looks like shit. So stop trying to do everything via shortcut ways, number one, and treat it as a long-term solution, long-term career, long-term vehicle for your success. So your optics have to be good. And in order for you to have good optics around your accounts and your personality and everything else, you need to be patient and not YOLO. Okay, I put $200 into whatever, some demo account. Let me YOLO it and do some dumb shit and expect to be making money. Because at the end of the day, this is all about making money. Okay, if this is not entertainment, this is not fun. If you're here for fun, trust me, you're gonna lose money. Fun, go to a casino, go blow some steam. You spend $1,000, spin the roulette wheel, whatever. You want to play some cards, whatever you want to do, and get a drink, right? This is not fun. This is about making money and making a lot of money. And to make a lot of money, you need to treat this seriously. So there are few fundamental concepts that stand the test of time in trading. Not a lot of people make money pissing against the wind. You know how many people try to short Tesla stock? How many hedge fund managers try to short? How many of them get blown out of the water? You know, it's the same way you do. Because some idiot, not idiot, but they had valid reasons to short Tesla, right? I'm just giving you an example. And they're like, okay, the Tesla is at it went from $14 to $50. Let's say 50. Well, here's $50, right? Somewhere. And then it went to $100. You're like, okay, doubled in value. There's no reason for it. There is the divergence. It went from that 100 to 400 on this motherfucking divergence in a year and a half worth of time before it then had a pullback, blah, 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 whatever, right? But do you think you're going to withstand this pressure of shorting? You know how many hedge funds got blown out of the water trying to short this fucking market? And they never saw this. They never caught this because they were trying to short even here. It's not like you're going to be like, yeah, I can short right here and rebuy it right here and then go along here, right? Because you're in the hindsight mode, you're a goddamn genius. No. The smart play is always to go with the trend because then you don't have to fight the fucking flow. You don't have to fight this thing. And use the pullback to get even longer. All right? So don't feel bad. It's a number one rookie mistake. 1 second. Let's see. It's a number one rookie mistake. So I'm trying to overtrade and piss against the wind because you think something went up by a lot. You have to short it. No, you don't. It's going to keep on going and going and going. Look at real estate. Look at pricing of housing. Yeah, there's momentary glimpse where shit crashes, whatever. You're not going to catch that glimpse, that once every 2 years event. You're not. You're kidding yourself. And all these movies you see about Big Short, blah, 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 2008 crash, most of these guys, 99% of people who try to short it and anticipate by putting money on the line didn't work out for them. All right? So just go with the trend, go with the flow. The price of real estate, as you see in every fucking city in the world, keeps on rising over a decade time period. Because why? Well, because real assets lose accumulate value because the devaluation of currencies and everything else because every central bank is essentially printing. They have a printing press to pay for the government debts. They print money, toilet paper, right? So whether you want it or not, the real assets will always keep going up in price until we have sound money policies, which nobody's going to be doing anytime soon, trust me. Anyway, so to scale the accounts, understand the fundamental flow and go with the flow. That's a very simple advice, very hard to do. It's like how to lose weight for a fat fuck. You eat a lot of protein, you hit the gym or go for walks and jogs or whatever, right? Eat a lot of protein, a lot of veggies, cut out the fucking breads and carbs, blah, 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 and you'll lose weight. Very simple. Every fucking book on a planet about diet talks about it for the last 30 fucking billion years. Every year, tens of billions of dollars of books and programs, how to lose weight, how to lose weight, how to lose. Everybody knows how to fucking lose weight. Everybody knows how to trade. It's not that difficult. Again, it's difficult to execute. But if you see a chart going from here to here, what do? Do you short this? No. Just buy. Just buy the fucking thing and let it work. It will work itself out. You don't have to be a goddamn Warren Buffett here. Just go with the flow. Simple fundamentals. You understand what central banks are doing. The United States is lowering interest rates. Okay. What does that mean? That means the price of other assets, value of other assets will simply go up because these are future pricing mechanisms. So the price of gold, the price of NASDAQs and SMASDAQs, all this bullshit just keep going up, up, up. Right? So if you have that knowledge, then you use your short-term time frames to buy into the major flow. Okay, so a basic analysis. What is this? What is this? This is simple lower highs, high, lower high, lower high, lower high, right? And lower lows. In a long-term trend, this is called a pullback, right? Let me, make it accurate. Fuck. It's just a pullback. Jesus Christ. Right? It breaks out. I mean, then, there's a big fight going on here. But you wait. This is lower highs, right? And lower lows. Until when? Until here. This was the low. This was the high. All of a sudden, it puts in the higher low. It stopped doing this, right? Now it's doing this. So what has happened? We had a shift in market structure from the downtrend or the corrective phase in the uptrend, right, into resumption of the trend. You also had a slew of economic news come out during this time that support this move up, right? So now it started making higher highs and higher lows, which is a definition of an uptrend. So what do you do at this juncture right here? You don't buy right here like a retard, obviously. All you have to do is just sit on your ass, wait for a pullback at whatever level, and buy into the direction of the larger time frame trend. That's all you have to do. And how do you do that? I use fibs. You can use ICT. You can use CBBB, Habibi, whatever the fuck you want to use. Right? I like my confluences. You like order blocks? Here's your fucking order block right here. Here's your order block. right? I like deep pullbacks. So I like my 618 and 786 zone coinciding with this motherfucking order block. So whatever technique, it's the same shit. It's the same shit, right? So if I see price come near these levels, and I see a sign of exhaustion and turnaround, I'm gonna buy. And what happens if this market keeps on running? Then it keeps on running. I'm not gonna fucking risk my money to buy here with the stop loss here. To make what? To make this much? This is all-time highs. The risk to reward does not warrant it, so you can't do that. Even though it can keep on running. But eventually a pullback will come, and I'll catch my entry into the direction of the major trend. Okay? All right. I think that's fairly exhausted. I hope you get it. I hope you get it. Let me read some questions. Where are we? Let me get to the questions. One sec. There we go. Let me enable the question thingy. Tell me that. There we go. I just explained it. I like deep pullbacks. So the question is, hey Stan, see you fib too often. Can you share your personal use for settings for the fibs? Yeah, absolutely. I'm not. You know, I can create a course and charge $2,000 for it, and be like any other jerk off on the planet, on YouTube, and sell you these courses, right? I'm giving you all this for free because this is not there is no magic secret way of making money. It's actually quite simple once you understand it. And this is what I found that works for me. Okay? So like I said, I like to wait for deep pullbacks, and I just simply wait for a turnaround sign, right? So if the direction of the daily and a 4-hour trend is up, then I'm gonna wait for a pullback, wait for a market structure change, and look how pretty it looks on the 4-hour, right? You try to go down, buyers came in, you have a turnaround candle, and a continuation, for crying out loud. This is why I like higher time frames. It's a lot easier to trade on higher time frames because you get these very reliable signals. Is this not reliable? You get a basic pullback, a breakout of the pullback with a reversal candle, and I just look for these reversal candles like this one here. It is not a reversal candle to you. Doesn't this look like a fucking reversal candle to you? Hitting the order block, whatever, right? And then you wait for the top of this candle to be taken out, and you go in the direction of the trend with the stop loss here or previous some swing low. That's it, right? Been showing you this day in, day out. So short term, this is getting a little overbought. I can't chase it up here. I can't justify chasing it here. So that never chase. You have to wait for a pullback. And in a very strong market, the minimum pullback is usually 38.2. So you get a 38.2, you get a reversal at 38.2, and it keeps on going, right? If I prefer to wait for a deeper pullback because I also get them, all right, at 618, between 618 and 786. And wherever the turnaround sign occurs, in one of these, this level, this is just a midway point between 618 and 786. All right, I see a candle like this. I see it stopped taking out. I either put a stop loss below here or a previous swing low. I prefer previous swing low, and I do 1-to-1 or 2-to-1, and that's it. Oh shit, forgot the. God damn it. Yeah. Forgot the stupid Telegram thing. Shit. All right. Same Nasdaq. We're looking at Nasdaq. Look, basic breakout. Look at this reversal candle. Out of they try to continue. So this, you have to understand the price is going down, right? This is a pullback in this downtrend. This right here, right? This is a pullback. They try to take it lower, and instead this candle closes like this. That's a reversal, and then it breaks out here. Let's say you didn't buy it when this top was taken out. You didn't buy it. You bought it after this candle closed, right? This is your trade now, and it's still ongoing, 1-to-1, targeting these highs. All right. How do I use the fibs? Same deal. I'm not going to be chasing up here already. I'm not going to be buying right now, even though it can keep on going up. Makes no sense. You're going to wait for a pullback. Minimal pullback usually is 38.2. If I see in a very strong market, 38.2 pullback and continuation, I don't usually take those. But once in a while, if I'm trading like a 15-minute chart or something intraday, I could take it. But I will move the stops I'll move stops to break even very, very fast. I'll take half off somewhere and stops to break even, because usually that's a very shallow pullback, and I prefer this. And I always get this. It happens. So here. Where did it go? 782 on a motherfucking, dot. Boom, boom, reversal buy. Right? On a 50, it did also see a reversal sign, and it started going. This is why, even if I take some at these other fibs, like it is here, if I take the trade hit the 50 on the money, let me remove this one. So see, it hit the 50, posted a reversal sign, right? Candle, tried to reverse, hit the previous support, turn resistance, and turn around, right? So that was a good way if you're intraday scalp trade. If you want to do, that's why I said I only trade at the shallow reversals at 38.2 or 50. I only trade intraday. I don't keep them for long. I'll take half off and I'll leave it at and put the break even stop very, very fast. All right, so that's why. But once it hits the deep, one sec, fib zone, like it did here, it actually posts a turnaround. That was it. See, 702, boom, boom. You have a railroad tracks. These two candles. That's a reversal pattern. Railroad tracks. Right? Engulfing candle, basically. That means the sellers coming in, and then a massive buying power comes in. Then they took the profit. They tried to take it down one more time, but the sellers crapped out. Another reversal candle. Yeah, you have to be a detective of price action to understand what the fuck is happening, right? So you always get those deep pullbacks. You always get deep pullbacks. You just have to be patient. Once you see a turnaround of the deep pullback, you 80% in a strong trending market, you always, not always, there's nothing always, but very high probability or a high percentage of times you get reversals, right? So now, again, you missed this boat. What do we do now? So, like I said, now you wait for the fibs. You fib the fucking thing, and you wait for a pullback to get into the direction of the trend, and that's it. You will make money trading this. You will be successful. You will become a millionaire trading just this. All right? And all you have to do is sit on your hands. And when I was your age, when I was younger, I never understood what it meant to sit on your hands. I can't be idle. I'm young. I got full of energy. I just can't sit and watch the fucking screens all day without being in the trade, right? But now I understand. It's, everything that my bosses used to tell me and all the mentors and I'm telling, now I'm regurgitating it back to you. right? I'm telling you, this is how you trade. You have to wait for a proper opportunity, and it's quality over quantity. And most novice traders do quantity and not quality. When emotions are on high after a loss, what mental framework do you successful funding traders use to stay disciplined? There is no mental framework. You fuck off. You literally need to reset your emotional state. You reset your emotional states by, first of all, detaching yourself from the root or the cause of the emotional state in the first place, meaning the fucking market, right? Or you trading in the market. So you need to go for a walk. Go for a long walk, an hour-long walk. Go for a jog. Go hit the gym. You need to get rid of that emotional state. You need to annul it, void it, and come back fresh with a fresh pair of eyes, with a balanced emotional state. You cannot be emotional after losses and think you're going to be succeeding, because most traders will not be able to do that, because they will either FOMO into the trades, they will take subpar trades, they overtrade, they revenge trade, all the fucking cliche typical mistakes, they always happen in those states. So in every bank, in every hedge fund, in every prop firm, big prop firm, you have risk managers that will tap you on the shoulder and tell you, go cool off, go fuck off for a day. And they also tell you the same thing when you're really on a winning streak as well. They'll tell you to take a step back, go cool off. Why? Because when you're running high on emotions, you know how many traders pass their first funded account and then they blow it all in the second payout, the third? You know? Because they're all, oh, I made it. Now my shit don't stink, as they say, right? They running high on emotions, positive emotions, and they become reckless. They think that they are the next greatest thing ever in trading world, and they soon find market humbles us all. Trust me. So there are reasons why we always tell you don't risk more than 2% or this and that. It's not because we don't want you to succeed. It's because we're trying to show you that after 100 years worth of trading, this is how you make money in trading. And all the other methods, everybody else tried to YOLO trading as well, okay? Everybody else tried let me risk the 10% of my $1,000 account per trade. And every time and time again, on long enough time scale, it results in a blown account. You can't do that. You're not going to succeed long term. And this is a marathon, not a sprint. So yeah, you have these videos made by some idiots, or some traders claim they turned $1,000 into $10,000 and then $10,000 into $100,000. Happens to maybe 0.01% by luck, not because of the trading skills. Because not a single trader on the planet will be trying to double their account with every move. That's a sign of an amateur. And even if you see any of these videos, how I turned $1,000 into $3 quadrillion, it's bullshit. It's horseshit. That's not a way. Even if you can do that, if you're a super high-end professional, some can, right? I do challenges. I did the challenge where I passed a prop firm account and got paid with 0 losses, and I took 50 trades, 0 losses, or I don't remember, something like that, right? There's a reason for that. But for the majority of people, that's not a way of trading. You know, it's a very high risk and stupid way of trading. And your job is to learn how to trade. Your job is to learn how to drive a car, first of all, right? You don't learn driving by getting on a racetrack and starting drifting the car. You're gonna crash. You're not even gonna be able to drift if you don't know how to operate a basic vehicle, right? So that's the that's the gist of it. So stop looking at videos how to turn your $100 into $1 million. That's bullshit. That's a red flag, immediate red flag. All right. Anyway, so you need to every successful trader that worked in any capacity in any firm, big firm, bank, whatever, they always know that you have to cool off. You need to reset your emotional states by doing exercise. You can have social life to do that for you. Some people fucking drink, whatever, right? But that's not a healthy way of dealing with the situation. So you need to, but most of the time you need to cut yourself off. You don't have a risk manager, meaning literal risk manager, to watch over your daily P&L, right? Unless it red flags with big losses. You need to become your own risk manager for the most part, and that's how you become successful. Because we cannot monitor every. We have thousands of traders. And after each trade, I'm not going to be able to sit with you and hold your hand and analyze every single trade that you take and do that with 6,000 traders, right? It's just impossible. So you need to become your own risk manager and take only those trades that are A plus setups, the setups that work, and not just approach each day and be like, oh, am I going to be long? Am I going to be short? None of that bullshit, right? I've been talking about it ad nauseum as well. And same thing with when you are in a losing streak. Losing streaks happen. You cannot escape them, and you need to just walk away. Obviously, you're on the wrong side of the tracks, as they say, right? You're in the wrong part of town. You need to fuck off for a little while and come back and reassess the situation. Oh my God, yeah. Now once you're not blinded like the bull, right, with the red collar, you're not you will start seeing things that you weren't seeing before. So that's why you need to go away and reset your mental state via exercises, walks, go talk to your girlfriend. I don't care, but you need to walk away, come back next day, and you'll be in a different emotional state. Obviously you cannot come back when you're all shaken out because you lost your account. You need a few days to pass for you to cool off. Otherwise, you're gonna get in trouble. All right. Stan, if trading is often compared to battle, do you think the real enemy is the market or the traders? You are your own worst enemy. It's all in your head, because if you make the right decisions, you'll be on the right side of the market, right? Nobody's fighting you here. Meaning nobody's out to get your $1,000, $10,000, $100,000, $1 million account. Banks are not sitting there. There's Jonathan right there with his $1,500 account. Let me fucking take his stop loss, right? No. So nobody knows that you exist, or sorry, that's the nature. So it's all in your head. You have to be, that's why I constantly preach to go with the flow with the major positioning, where rather with where the flow is going towards. If you understand where everything is going towards, you go there, and that's it, with a winning team, and you'll crush it. So it's all in your head. And that's why I keep telling you not to short it, because I'm trying to change your mindset. Because I know how Laruki's mindsets work, and I see statistics daily on how people blow accounts. So I know how not how you particularly, but majority of losing traders think. And that's why I'm yelling here fucking every week, don't trade against the trend. And yet again, 90% of you do. And you get what? You get fucked. That's what happens. All right. Would you rather do 2x trades a day or 3 trades per week? Which is 100%. I will take 3 trades a week, because those 3 trades a week will be cherry picked. They will be A setups. That means I was waiting for them to happen, and I executed on trades that were probably on a higher time frame and less noise, and they're probably higher quality. So I always take quality over quantity, 100%. Can you take a look at the aluminum? Jesus Christ. I don't even know the symbol for futures on aluminum, honestly. I trade copper, but never aluminum. Jesus, let's see. while you're approaching top of the range. One sec, let me remove it. Yeah. So you're approaching top of the range over here, right? So this, as you can see, this is the top. So watch it for breakout retest continuation. If you're trade, this is a weekly chart. Obviously, prices, and today we already hit the daily ATR, so to speak, right? Oh, looky here, a deep pullback. Oh my God! Ah, wow! All the humanity, right? So if you miss this pullback, wait for another pullback. If you if you don't want to wait on the, obviously this is not a easy way chart to trade, but you're approaching long-term resistance here. One sec, I'm just reading questions. Yeah, so you're approaching this resistance. So obviously, if you're gonna be taking longs, your risk needs to be, you realize that this might top out one more time, then reverse, and this is a range trading for now until you get out of this range, right, which is this. You're essentially in a range environment that you've been for 2 years, 3 years, right? 3 years since November 22, you've been in this range. So treat it as a range. I would be a buyer. If you see aluminum at 2200, buy it. Buy it. All right, because with the way the world works nowadays, it will. You want to own assets, real assets, because everybody's printing money. All the metals are going up. Look at, where's H? You also want to look at other metals, So same thing with copper, right? Unless you have an economic crash, metals will keep going up. All right. So with aluminum, I would look for a dip, but again, we're approaching the ceiling, so it's very hard to buy now. All right. But ultimately, if I don't see a great setup, I don't simply, if I'm not going to be forcing a trade. If I see aluminum on a nice deep pullback, that's when I'm going to buy it. I'm not going to be a seller of it because I don't know enough, so to speak, about the intricacies of aluminum market. And every market has, same thing with the oil, for example. Unless you follow, it's not simple. Okay? You need to understand the fundamentals behind the oil, what all the major oil producing countries are doing, what they're saying, what their sentiment is, this, that, blah, blah, blah. It's not just technical charts. Right? This is how you end up with these fucking, by the way, nice reversal candle, isn't it? But anyway, yeah. You pick some, honestly, I don't know why you're trading aluminum, but there are easier ways to trade right now than aluminum. But great question, why not? All right, seems like we're out of time. Thank you, bro, to make it in this game with no mentorship. You can. There's no, you can make it in without any mentorship. Nobody said you have to be mentored by anybody. It might take you longer though. But there are plenty of great, successful people who taught themselves how to be successful without listening, or so. If you don't want to be having mentorship, don't have mentorships. Nobody cares. Or should it be the first investment when I start making a good amount of trading money? Well, investments are measured in the rate of return on the investment and the likelihood of the risk on the investment, right? So the likelihood of you getting your initial investment back, and then what you can make. So usually, if you can produce certain percentage through trading, you can reinvest in yourself first of all, and you can manage your own account, and which every successful trader does, right? So long-term investments, probably you then after a decade of doing this, you should then diversify into. Obviously, you have a stock portfolio, you have real estate portfolio as well. So you have liquid portfolios of investments and not so liquid, like real estate, etc., and or other businesses, right? So, but before you cross that bridge, you need to first, put in your decade worth of killing yourself in the markets, and that's what it is. It's hard work, and I don't think you're gonna have enough money to do willy nilly investments until you've been trading at least for 5 years. 5 years, because that's when you get to $1 million accounts and more, and that's when you start making hundreds of thousands a month, and that's when you start fucking around with investments. If you have $10,000, don't invest it into anything. Invest it into knowledge, into yourself. Reinvest in yourself. Keep going and growing, because that's not money. That's bullshit. So until you start making, until you're a millionaire trader, there's no investments. It's just putting money back into yourself, learning, adjusting, and growing. All right, great question, by the way. So, all right, ladies and gentlemen, thank you so much for attending today. I hope I gave you some valuable insight. How it's all about your psychology, and this is why I'm not giving you BC, CB, Shmeeby bullshit that Michael is, ICT is horseshit, bullshit, post factum trading nonsense. Understand that once you understand a few basic things and you put everything together, you will start seeing the big picture. Once you see the big picture, you just have to go into the direction of that big picture, and you will be successful. All right. I will see you everyone on Wednesday, 9 a.m. sharp. We'll do another one, and we'll pick another theme. Prepare your questions. Great questions win prizes. All right. All right, ladies and gentlemen. Thank you so much. I'll see you all